Hi everyone, welcome to another weekly stock market update. Is it time to buy the dip? Which are the best opportunities? Where's the money to be made? Let me run through 42 slides in, I think, 10 minutes, okay? So let's get on with it. What this shows you over here, my face permitting, is the weekly performance of some of the stocks. There's a bit more stability now. You got a lot more greens coming in than you had previously. That's obviously got to be a good thing. Okay, particularly utilities coming out now. That's just a week though, and that's too short a time frame of which to decide these things. So how does it look if we then look at something conventional like the price earnings ratio and the valuations? Well, again, energy, fewer of those companies looking well valued. And in financial services, banks, asset management, insurance, you've got better value over there. And one or two in TMT, tech, media, telecoms, or communication services also coming back into the fore, as in relatively undervalued. Meta, look at that. 12. But that's just on one measure of valuation. Of course, there's more than one measure. In particular, for instance, there's PEG, price earnings growth ratios. And if we look at the price earnings growth ratios over here, the greens, again, energy are a lot stronger. And some of those big tech names we're used to, like Google, Alphabet, Microsoft, Amazon, they come into play once again. Something beaten down like PayPal, which is down some 80%. At long last has a PEG ratio still not below 1. Below 1 would suggest undervalued, but certainly a lot better valued than it was previously. And the market's looking more at valuations than anything else. Now, on our investment side, can we get back to the heady days? This is the 54% return in the 12 months to the end of November 2021. Can we get to a 12-month return on our stocks of those kind of returns? And those were all exited last November because the 12 months were up. And it's just as well they were exited last November when the 12 months were up, because they've all fallen substantially since then. So what might we look at? And are the days of 54% returns in 12 months all over? Okay, well, let's just have a broader look at the S&P 500. And I'm afraid there's still a fair bit of downward momentum. Yes, on the MACD, a measure of momentum, it's relatively low, which is good to form a base. The stochastics forming a base as well. But really, to see which direction things might go, I'd have to look at this, the monthly chart on it, and that suggests we could potentially have further lower to go. I know that's not always the case because it can bottom and turn around pretty quickly. Do you think it's going to turn around all of a sudden and do a V-shaped reaction? I doubt it. I think this is not the likely direction. I'm afraid I'll have to wait another week before I put more money into the market, or put money into the market. So how do some of the big name stocks that you all like me to talk about, how do they look? Well, that's Apple, and it's down, 25% in the last 2 to 3 months. Were it to do a V-shaped recovery, that'd give you a 32% return. Every time you see a B down here, that suggests an analyst or a bank which has given a buy recommendation. H means hold, and S is sell, okay? And what do we have? Well, I'm afraid, looking again at the MACD over here, I'm afraid I don't really necessarily see this as something which is likely to do a V-shaped recovery, but more likely to continue falling a little bit. It might be forming a base, but I'm going to wait another week. Maybe after that week, it'll go more like this. Maybe it'll suddenly shoot up, but what's the catalyst to make it shoot up? That's the problem. And it's the same problem with Microsoft. I'm going to wait another week, see what happens. It's down 30%, so I've saved myself with those falls at least. So at least I've saved myself those. And were it to do a V-shaped recovery, then obviously, even if it took a year, you'd be looking at making more than a 30% return again. What's the story with Amazon? Again, we've got some falls on these are the monthly MACDs, and they suggest downward momentum, even though on the weeklies, on the stochastic, which tends to be a bit premature in determining momentum, it's forming something of a base. So do we have a base here? Well, I'll leave it another week to see. That one is down 44% in the 7 months so far, and 65% would be the return were it to go to all-time highs. And even if it took a year, you'd take it. If it took 2 years, you'd take it, wouldn't you? With Meta, we are down some 55% on that one. I'll give it another week to see if this has truly settled down before it maybe moves upwards. And were it to move up, and were it even to take, let's even say 2 years, that would mean doubling your money. If it took 5 years, you'd double your money in 5 years. But I'm going to wait. Costco, a favorite of mine, is down 27%. Again, we got triggered to a sell earlier on because it dropped 10% off the highs. Then it dropped 15%. Each one of those triggers a sell. And worst case, if something drops 25% from its peak, then it's a sell, or if 12 months are up. Now, again, with this, still a bit of downward momentum, so I'm going to wait. Were it to go back up, 35% would be the return to the upside, but I'll wait another week. With PayPal, I think we're getting very close to a base. You can see what a base might look like. Look at that. Okay, and it's hovering around there. That's down 77%. And even if over the next 2 years it does a more gentle trajectory as opposed to a V shape, if it does a gentle trajectory, that's a 36% return. Not too bad. I won't go through each one of these like that. Some of the commodities and oil and gas companies, you know, they've come off a fair bit so far, and so I wouldn't be looking to get into them. And equally, some of the popular ones I'm just mentioning here, like Qualcomm, not looking to get into any of these. Johnson & Johnson comes up a lot. However, I am afraid that it's more a wait and see. Qatar Energy had this fantastic ride up, as did so many of our energy stocks, and then they triggered sells as they fell. We had to get out, and it might be that they can go back, but that hit a 25% from peak stop loss, so I'm afraid I had to then get back out. Halliburton, great run up as they've had profit taking and fallen out. And I'm not saying they won't necessarily go up, but as things stand, too neutral on it to make a decision. Same with Marathon, it triggered a stop loss. So we have a wonderful little ride up, and then it falls back and you end up giving back some of those profits and end up with less profits than you otherwise would have. Well, that's just life, isn't it? And at the moment, would it be in a buy category? No, not right now at the moment, but we'll keep doing these updates. Occidental, I do own, so does Warren Buffett. Were it to fall, as some of the others have, that would mean a 29% drop from current levels. However, I suspect Warren thinks it's going to go more like this and give a good return over the next 12 months. Won't go into Mosaic or Devon, similar story to some of the other energy companies. Good profits, then drop back. Now it's too late to get into them as things stand, but we'll have another review next week. Same with Marathon. So a lot of the energies are like that. Valero, great profits. Now they've fallen back. Too early to get back in. We'll just determine. So let me give you a bit more insights based on a whole bunch of reports that I've been reading, which is everything from Goldman Sachs, JP Morgan, HSBC, to Citibank as well, and the stocks they like and so on. So let's just do some analysis based on some of the names. Well, Advanced Micro Devices comes up a fair bit. Now, I'd probably give this a slight special situation on this one. Higher risk, but maybe something of a bottoming out. And I'd say over the next 2 years, could look on the upside at an 81% return. That's high risk. It's more speculative, but it is one which tends to trend up, and I think it's bottomed, and that's a possible direction. High risk, high risk, high risk is the warning I'd give. Antero Resources ticks a lot of boxes on our valuation growth income. It's kissing the upward trend line, and I'm going to say that at that angle of inclination, despite it being overbought over here, is an attractive company, as is Pioneer Natural Resources. Similar kind of story, nice upward move over there, and whilst it's overbought, that support should mean it bounces back up again. Okay. On the trading side, as you'll know with my Pips Predator indicator, we get momentum indications either to go short the market or long like this. Some of the instruments we've been looking at, Australian dollar, US dollar, 1 hour, and you can see some of the signals there. Some of them just go sideways. Well, that's life. I can't force the markets to change, but Australian dollar, Japanese yen has been a good one to keep an eye on over there, and you can see that. Similarly, Goldman Sachs over here, great little trend and very much simpler to trade. Also, yeah, I said it, Doge. I'm afraid it's been an easy one with trends to trade. You can see it there on the Pips Predator indicator. If you haven't got it, that's pipspredator.com. Similarly with cable. Now, normally this isn't that easy. It sometimes is a bit crazy, and this part wasn't that easy, but then these downward moves have been phenomenal and fantastic and simpler to trade off the back of. Keep an eye on Australian dollar, New Zealand dollar if you're into trading as well, and Google stroke Alphabet. As I've said, Dogecoin, they're moving it forward. We got more signals, more good trends. Australian dollar, New Zealand dollar, and Amazon has been an easier one as well. It's been smoothly trending as well. There you go. And another one for you. Don't forget, I've got my summer school, 27th and 28th of July. That's where it'll be held. No, not at my home. Go to alpeshpatel.com/Spain. Okay. And these are all the things we're going to be covering there. So you're going to love it. In 2 intense days, I'm going to turn you all into fund managers and hedge fund managers. We're going to go through everything for beginners to advanced from trading and investing. And there's going to be a bunch of practical sessions as well, where you're going to be doing exercises so you really learn how to analyze companies relatively quickly and then progress forward on both your trading and investing sides as well. It's going to be intense, but we're going to have lunches together, we're going to have dinner together, so it's also going to be fun, and I can't think of a quicker, more efficient, effective way to learn than that. Thank you all very much indeed. Hope to see you in Spain.